Let's say you want to buy a stock, and a stock is quite simply a share of a company. So how do you buy a stock? Well, you need some sort of broker or middle person to transact that exchange. And today, the way that we do it is through online brokers. And that Robinhood was really the pioneer of bringing commissions, which is the price to buy shares, bringing commissions down to zero for the consumer. And then they've also just made a really intuitive app where you can just go right on your iPhone or smartphone. You can go into their app, and it's really easy to buy shares of companies. This period that we're seeing right now, it does somewhat closely resemble what we saw in the late 90s. With the rise of the internet, is you started to see the E-Trades, the TD Ameritrades of the world, encouraging people to say, hey, don't call a broker anymore, do it yourself. And that ended in a pretty significant crash. That parallels what we saw most recently with the whole GameStop and the meme stock euphoria. I think if there is tension with Wall Street, it's been the rise of the retail trader, where you now have, people who aren't necessarily considered sophisticated money, quote unquote, trading stocks and, causing somewhat of disruption in certain stocks because they've gotten interest in kind of a small subset of the trading community. I think where more of the tension is actually more the regulators. So I think the concern, across a lot of politicians and regulators is that Robinhood has created this casino-like atmosphere that has encouraged people to take a lot of risk with investing in the stock market, trading in and out of certain companies on a frequent basis, and investing more money than they probably should. And I think that's what made this whole GameStop situation so interesting from my standpoint, in that this was a situation where a hedge fund was taking an extraordinary amount of risk in the sense that they were, heavily shorted one particular stock. And I think the really amazing part of this story is that the retail traders banded together and they took out this hedge fund. There's a really compelling story here. There is an ecosystem in place in the hedge fund community that takes money from other people, and they can take extraordinary risk, charge a 2% management fee and 20% of the profits. And for some reason that's okay. But then the regulators want to stop everyday people from trading on apps like Robinhood, or at least make it more difficult to, help prevent them from hurting themselves. So I think there's real concern though, that, there are people who are going to get swept up into this, individual investors who are going to lose a lot by trading some of these meme stocks. But I'm very much of the opinion of let them. And sometimes people have to learn a hard lesson. I know a lot of people that learned hard lessons from the dot-com boom. I don't think anyone's going to stop the retail trader. I think that's here to stay, and I think for good reason. I think you might see some regulation with respect to maybe some of the casino-like nature or gamification that you see on some of these apps. I've been in the investment industry for close to 20 years. And one of my greatest joys throughout my career has been teaching financial literacy in the South Bronx. And Robinhood has played such a key role in how I work with a lot of these students. And I've seen it make a huge difference. So, I think with Robinhood, I think it's how you use it. And I personally, from my own experience, I have literally seen it change lives, because it's allowed people who have been kind of shut out of ownership opportunities to start being an owner.